Let's talk about where exactly the markets are going to head, whether gold is poised to shine better, and what's going to happen to the dollar move as well. We've got on board with us Peter Brandt joining in on the show right now. Peter, morning. Good to have you on the show. You know, the US markets have made a V-shaped recovery, Peter, from their March lows, with the Nasdaq making fresh new life highs. Was this move on expected lines, and what's really the way forward? Could we see the gains getting capped anytime soon?
Wow, largely unexpected by me. I think largely unexpected, at least in terms of the magnitude of the V-shaped recovery by so many market participants. Of course, we were taking a look at unemployment numbers in the U.S. We were looking at the impact of the coronavirus. I don't think it was a surprise that the market bounced hard off of the March lows. But for me, it's been a surprise that we've marched strongly into new high ground here for the NASDAQ. S&Ps are a ways away, but the magnitude of the advance in one sense is very surprising. Of course, in one sense, it's not, because the Federal Reserve has pretty much said that it will do whatever it needs to do to prop up the markets. But I didn't expect they'd prop them up to the magnitude that we've seen, given the conditions that we're under.
You know, a few weeks back, Peter, you called for the Nifty to be heading towards 73.77 with an outside chance of even 10,600 coming first. Do you still maintain lower levels on the Nifty? And at what point would you then change your view? Because, you know, we're already at 10,800 on the index.
Wow, that's just a great question. Of course, my thinking back then was the fact that we saw the Nifty have a spectacular historical market from the early 2000s on up to the high at 12,000 plus, that we, under the conditions of a downward move in the U.S. market and coronavirus, we could see the Nifty correct half of all of that, and we only got back into the 7,000s. I'm not surprised that it got back to 10,000, 10,600. I am surprised it's gone to 10.7, 10.8. But I think, to me, the big thing that's changed is China. It's the emerging markets are rallying, but particularly China. We've had a major breakout in the China A50, and I think the China A50 goes all the way up to 25 to 30,000 from here. We broke out about 15,000. It was very significant. So it's very difficult for me to imagine that we see the China A50 have really an historic bull market that doubles in price from where we are right now. And at the same time, then see the Nifty have the bear market that I thought we could have, that we would rally back to the 10.6 level, roll over, and then at least go back and test the lows in the sevens. I'm not sure that'll happen right now, given the fact that we're seeing strength in the emerging market index and really seeing strength led by China, which I think is for real. And so with this bull market going on in China, I think it's going to be very difficult for the Nifty to really emerge back and retest the 7,000 plus lows. Rather, I think now the Nifty is probably going to be stuck in a trading range of 9 on up to 11 for right now. On days that the Nifty and perhaps U.S. rally sharp, we'll see some upward pressure in the Nifty. But I think the Nifty is now fairly priced in here. I'm revising my idea that we could see the Nifty really penetrate that the 7,000 plus lows on the downside. At this point, I don't see that happening.
So what would be your preference then, Peter, within the China and India comparison? Where do you think liquidity is going to flow?
Well, I think the liquidity is going to stay in the U.S. market, of course. But I think the liquidity from the U.S. market is partially due to sensitivity of currency strengths. We have a currency war going on, of course. But for now, the liquidity always will remain in the U.S. But I see that liquidity is going to start moving back out into some of the emerging markets. You know, emerging market stock prices are very low relative to the U.S. I think smart investors, particularly those that know how to hedge their own home currency, will start moving back into some of these emerging markets, Brazil, India, China, of course. I think big uncertainty, of course, in China is what happens to Taiwan and the Hong Kong markets. There's some political uncertainty there, but I definitely see monies moving from the Western markets back into the Asian markets over the months ahead.
Okay, on oil, what are the charts telling you? We've seen a fair amount of volatility this year. What's the trend looking like now?
Oh, wow, we quite couldn't really expect that. That was probably a once in a lifetime situation. But I think, yeah, oil has bounced back. Oil shouldn't have been minus $40. That was a quirk of the delivery process. That wasn't actually real. I think oil has now rallied back about as high as it's going to, but I don't really see oil moving much beyond $30 to $50 range here for considerable period of time. I think there's some depressed demand coming from slowdown in the economies, but you also have shutdown of the marginal cost of production oil lands. So I think those two will balance each other out and do a dance in really the entire year ahead. We won't really see a trend in oil much from where we are right now. So I think oil is just going to be stuck in a very broad trading range from its current price level.
Where do you think cryptocurrency is headed? I mean, is there merit to believe that for those naysayers who are writing off Bitcoin completely would be the ones who would be acknowledging the importance of a digital or a cryptocurrency? Because the world is becoming digital, the world is becoming more digital than whether it is paying money on your phone or using your phone to buy groceries. I mean, everything is on phone. So then why not embrace the digital technology as a reality?
I mean, that's a great question. I mean, in reality, I think we're seeing upward pressure on equities and gold for the same reason. And that is the liquidity that's coming in from the Federal Reserve and other central banks. And so we have that liquidity coming forth, propping up equity prices, of course, but that same liquidity is really impacting the gold market, especially with low interest rates, because you have a certain amount of gold above ground. You have an above ground stock, and you measure that above ground stock relative to fiat currencies in circulation. It's not surprising that we see both markets up. I mean, gold's come a long way. I mean, just a year ago, gold was 11.5, 1,150, under $1,200 an ounce. Now we've moved up over 18. The all-time high of gold is 1920, and so I probably definitely think we go to that level. So gold's in a strong bull market. I think what's dragging on gold is some of the gold mining stocks. We've seen some strength there, but of course we're a long way away from the highs in the mining stocks. And but the path of least resistance in gold, I believe, is up. We'll certainly see a test of the mid 1900 level. What takes place beyond that, I'm not sure. I think I tend to want to be more constructive to silver price, which I think is still going to have a big run ahead of it, and also platinum, a big run ahead of it. So my focus in precious metals tends to be on platinum and silver. Stock market, I think, will remain stout. I would expect that we'll see a correction in the magnitude of 5%, 5 to 10% in U.S. equities somewhere in the next 2 months. But I think for the balance of the year, we'll see upward pressure again coming into the stock market through the election.
Which side of the fence are you in when it comes to the dollar index, which is off by about 5% from the recent high? The world moved into dollar. The world moves into dollar every time there is a crisis, and March and April were no different. But now, as US is printing more and more money, it looks like the dollar index has peaked out.
I'm confused about the dollar, actually. I mean, I see two things. I see the market just getting flooded with dollars from the Fed, which tends to let me think downside pressure in the dollar index. But I also see the World Central Bank and balance of payments are in a short dollar position. So there again, the U.S. dollar, when you really look at a weekly chart or monthly chart, it's really done nothing in the last year and a half. It's had big ups, it's had big down. That tends to return to about the level it is right now. I really don't see any reason that will stop. I do think the dollar will continue to gain on the rupee, though. but not much. We've had a multi-year bull market in the dollar against the rupee, or put another way, a multi-year bear market in the rupee. I still think that we'll see the dollar rupee pair going up to the 79, 81 level, somewhere in there. I don't see really it going much higher. So we're almost to the end of the big run in the dollar against the rupee, but I think it has ways to go before we finally see the top in the dollar rupee pair.
Right. Peter, last interaction, you were fairly bullish on the prospects of Bitcoin. However, it's not been able to really cross the above the declining trend line from its life high. Do you really think it will happen anytime soon and it will be back to being the fad that it was?
Yeah, I mean, I really believe one of two things is going to happen in Bitcoin. We're going to crawl up and we're going to break that trend line, especially as we close over 12,000. And I think we go to all-time highs on the way to 50,000 in Bitcoin. I remain extremely constructive on Bitcoin. I think the other alternative is we do falter up where we are up in this level. We really can't make much progress past 11,000. Then have a pullback towards 7,500, and then the bull market starts from there somewhere in August or September. I'm prepared to respond to either scenario. I am considerably long Bitcoin. I will continue to hold that Bitcoin with a very strong upward bias in Bitcoin. My question is, do we really go into a bull phase from current levels, or do we have one more correction in the magnitude of $3,000 before Bitcoin finally ends its accumulation process? We've had some strength here this week in the altcoins, and really in recent days, we've seen the altcoins really pick up some strength. And so we could see some leadership there that will eventually then spill into Bitcoins. But the altcoins have gotten very cheap relative to Bitcoin, so that's not surprising. And so I remain long-term very constructive on the crypto space, really led by Ether and Bitcoin, although various altcoins will have their day in the sun.
Peter, we'll let you go on that note. Appreciate you taking the time out and joining in, giving us an overall view as to what goes on with the US dollar, how you're looking at the overall China markets as well as India, and of course your view on different asset classes.